So, how can you tell if a country's financial market is actually healthy? I mean, really healthy. It's not just about the flashy headlines. You need a deep, expert diagnosis. And that's exactly what we're digging into today. A full financial health checkup for Thailand, one of Southeast Asia's most dynamic markets. This is all based on a 2019 assessment from the World Bank and the IMF. So let's see what they found.
But first, you might be asking, why all the focus on Thailand? Well, it's because when it comes to capital markets in the ASEAN region, Thailand isn't just another player. It's a real powerhouse. The scale and importance of its markets are seriously impressive, which means getting this health check right isn't just a big deal for Thailand. It matters for the entire region.
I mean, just look at the sheer volume of stocks being traded every single day. We're talking about the most liquid and active market in the region, consistently outpacing major hubs like Singapore and Malaysia. It's just this constant hum of activity, which tells you investors have a ton of confidence buying and selling there.
And, it's not just about that daily churn. This is about growth. We're looking at the value of IPOs here. That's when companies go public to raise money for the first time. And between 2013 and 2018, Thailand was leading the pack. This isn't just a number. It's a huge sign that Thailand is seen as the place to be for new companies to get the capital they need to grow. So what does all this activity actually add up to? Well, in 2018, the total value of all the companies listed on the Stock Exchange of Thailand, or SET, was a staggering 544 billion US dollars. That really puts into perspective the sheer scale of the financial engine we're examining here. Okay, so we've established the market is huge and it's dynamic. But here's the billion-dollar question. Is it safe? Is it well regulated? That's exactly what the World Bank and the IMF wanted to find out with their detailed assessment. And listen, this wasn't just some casual lookover. They did what's called a Financial Sector Assessment Program, or FSAP. You can think of it as a deep dive stress test for a country's entire financial system. It's a really comprehensive review of all the rules, the regulators, and, of course, the risks. Right at the heart of this whole system is Thailand's Securities and Exchange Commission, the SEC. Now, to keep it simple, just think of them as the market's main referee. It's their job to set the rules, keep an eye on all the players, and make sure the game is fair for absolutely everyone, especially the investors. Now, the SEC isn't playing this game alone. There are a few other key players on the field. You've got the SET, which is the actual marketplace, kind of like the stadium where all the stocks are traded. And then you have the TBMA, the Thai Bond Market Association, which oversees the massive bond market. And trust me, we'll be hearing a lot more about them later. All right, the stage is set. Let's get to the results of this checkup. The World Bank basically gave the market a report card. So where did Thailand get top marks? Well, the report card had some really high marks. It showed the regulatory framework is a whole lot stronger. The SEC now has new tools in its toolkit, like being able to impose fines and sanctions directly, which is way faster for punishing any wrongdoing. Smaller investors have more of a voice now and better protections. There are stronger safeguards for investor assets, and the SEC is working much better with foreign regulators, which is absolutely critical in today's global economy. And hey, you don't have to take my word for it. Here's the official verdict straight from the World Bank's report. For a little context, ISCO is the international body for the world's securities regulators. So meeting their principles, that's the global gold standard. This is some seriously high praise. But of course, no checkup is ever perfect, right? A good diagnosis also has to flag potential problems. And the assessment definitely did that, pointing out some key areas of risk, kind of like the yellow warning lights on the system's dashboard. So, while the foundation is strong, the report found some cracks. It noted the potential for political interference in certain decisions, which can really undermine trust. The SEC's legal power over the stock exchange itself isn't totally ironclad, which could create some loopholes. And this next one is a big one. Surveillance data arrives with a 2-month delay. I mean, can you imagine a referee only seeing a foul 2 months after the game ended? Finally, the SEC can't always act fast enough to take over a failing firm to protect customer money. Now let's drill down on one of the biggest risks the report highlighted. It has everything to do with the bond market, and it all comes down to this one number, 99%. Yup, 99%. That's how much of the bond trading in Thailand happens over the counter, or OTC. This means it's not happening out in the open on a public exchange like the stock market. Instead, it's all happening in private deals between big players like dealers and mutual funds.
And that, by its very nature, makes the market way less transparent.
So why does that matter? Well, think about it like this. If you're buying a house, you want to see what similar houses in the neighborhood actually sold for, right? Not just what people were asking for them. The report found that this massive bond market often relies on those asking prices, these indicative quotes that aren't firm. In a market this big, relying on estimates creates a serious risk that nobody really knows the true fair price of what's being traded. So the diagnosis is in. We've got a market that's mostly healthy and has made some great progress, but one that also has some clear and present risks. So what's the prescription? Well, the World Bank didn't just point out problems, it laid out a very clear action plan. They recommended 4 key steps to build a healthier, more resilient market. First, make the SEC truly independent. Give it the final say on things like who gets a license. Second, boost its enforcement power so it can bring action against all violations. Third, get the referee a live feed. Upgrade surveillance to get that market data in real time. And fourth, bring that giant bond market out of the shadows to increase transparency and make sure prices are fair and reliable. And if there's one recommendation that really just sums up the core challenge here, it's this one. This is all about giving the referee a live video feed of the game instead of an old tape from 2 months ago. It is absolutely fundamental if you want to spot and stop market manipulation and ensure fairness for everyone. So the key takeaway here is that Thailand's market is a regional leader that's worked really hard to strengthen its rules. But this World Bank checkup is also a critical reminder. In a world where billions of dollars can move in milliseconds, can a regulator that's relying on 2-month-old data ever truly keep the market safe? That is the multi-billion-dollar question, not just for Thailand, but for regulators all over the world.